Good afternoon, everybody. Welcome back to Ride On Academia. We are still on our series on inventory valuation. Okay, now in our previous video, we looked at the first in, first out method of inventory valuation, how we can use the first in, first out method to calculate the value of closing stock. Now, in this particular video, we're going to be looking at the direct opposite. Okay, we're looking at the last in, first out method of calculating the value of closing stock. Okay, now that is the L.I.F.O method, the last in first out. All right, what we're going to be doing in this particular video. So this, like I said, is the direct opposite, right? It means that in this case we are using the current material that was bought, okay, that was purchased or bought. We are using that one as a basis for issue. It means that the last or current material that was bought, the last material that was bought, we have to be issued first before the next material, okay, is issued out. So we are looking at the last. In this case, we are looking at from the last to the earliest, okay, no longer from the earliest to the latest, but we are looking at from the latest or the most current to the least current. All right, now we're still using the same example. Like I said, we want to be able to compare the value of our closing stock, so we're still using the same example for our calculation. Now we have that God's Favor Enterprise deal with purchase and sale of merchandise variety of fish nets. The enterprise had 80 bundle of net at the beginning of the year, okay, January 2021, and it was valued at 288,000 naira. Okay, so let's bring it at the beginning of the year, 1st of January. It was not a receipt, neither was it an issue. Okay, so that's an opening stock, the balance available at the beginning of the year, and we had 80 units. Okay, and the value we had was 288,000. All right, this is our value at the beginning of the year. Now let's look at the activities that took place in the year. On the 5th of January, we purchased 200 bundles of nets at 2,000 naira each, right? We purchased 200 bundles of net on the 5th of January. The quantity is 200 at 2,000 naira. The price per unit, 1,000 naira each. Okay, that is our value we are multiplying. Okay, so that will be giving us 400,000 naira. To balance, for like I said, for our receipt, we're adding. Okay, so we're adding quantity with our quantity, the previous balance to the quantity that was bought, all right, to give us 280 units. All right, and then our value, this is our previous value, we are adding it up. That will be giving us 688,000. All right, so that's that. Now the next transaction we have on the 25th of January, we purchased 300 bundles on 25th of January, 300 bundles at 2,200 naira each. So it's still a receipt on the 25th. 300 bundles, right? The price is 2,200 naira for each. Okay, the value we are multiplying, to get our value we are multiplying, right? And that will be giving us 160,000 naira. Now at the, like, to balance at the end of the day, we have to balance this. So we are adding, because it's still a receipt, right? Quantity plus our quantity is giving us 580. Mind you, there was no issue. Okay, 580, and then for the value we'll be having okay, we have 1,348,000 naira. All right, now the next thing we're looking at is on the 10th of March, we sold 160 bundle of nets at 3,800 naira. Like I said, we're not really focused on how much the goods were sold. Okay, we are using the price at which they were bought, because we want to calculate the value of our closing stock. All right, so the price at which they were bought, what we're going to be considering here, not really what they were sold in the business. Okay, now we are looking at 160 bundles were sold, that is, they were issued out. Okay, so that's on the 10th of March. Not a receipt, all right? So 160 bundle, like I said, this is last in, first out. So we're no longer looking at the first goods that were in the shop, but we're looking at the most current, okay, which is that which was available on the 25th. Okay, this is the most current of them all. So we are starting from down upward, no longer up downwards. All right. So if we want to issue now, we can issue because here is more than 160, so we can issue from here, right? So we are going to be issuing from this place 160. There's no need to break it down because this place can cover it though. Are we there now? 160, we are using that price, which is 2,200, and then our value 352,000 naira. All right, this is our value, 352,000 naira. Now at the end of the day, we also need to balance, right? Now in the case of an issue, I forgot our arrow. In the case of an issue, goods are going out, right? Now when goods go out, we need to subtract. So quantity, this is the previous balance, right? Quantity, we are subtracting. Okay, this one was removed to balance the account, so we have to minus, and we having what? 420 units. Now the value, we have to subtract this. That will be giving us 996,000. All right, that will be giving us 996,000 for our balance. All right, now let's look at the next transaction. We have that on the 15th of April 2021, we still sold 180 bundles, right? 180 bundles of net at 3,700. We're not really looking at how much they were sold because we want to calculate cost of goods at the end of the, that is the closing stock, right? We are only focused on the price at which these goods were bought. All right, now we have that on the 15th April we sold. All right, so it is not a receipt, it's still an issue. So now we want to issue 180 bundles of net. 180 bundles, mind you, we just removed 160 from this 300. That means we are left with just 140, right? Now what we need to issue out now is 180 bundles. That means we'll have 140 here and then we borrow the balance. Okay, we are following the most current. Then when we are through with this, then we can go to the next most current. Okay, so we have 140. 140, the price is 2,200, so that will be giving us 308,000, right? But this is not 180, right? We are still short of 40, so we can now pick the 40 from the next person. So now we are through with this. Okay, we are through with the 300. We can now pick the 40 from the next person, which is the 200. Okay, we'll pick 40 from 200 to issue out at what price is this? 2,000 naira. All right, so the value at the end, when we multiply, our value is what? 80,000. So I would like to separate this so that it will be easy to understand. Okay, so now for how do we calculate our balance? Since we are having two entries, right, we'll calculate our balance. The most recent balance for quantity is 420, so we're going to be deducting 180, which is the sum total, right? 180, so we're going to be deducting 180 from 420, which will be having 240 units, right? And now for the value, we're also going to be taking the sum total of this, which is 388, right? So we're deducting 388,000, which is the sum total. We're deducting from 996,000, and that will be giving us 608,000. All right, 608,000. That's our balance for the issue. All right, now the last transaction here is on the 20th of May. Okay, on the 20th of May we purchased 140 net at 2,400 naira each. Okay, on the 20th of May, so let's close this up. On the 20th of May, okay, we purchased 140 nets, that's the unit 140, and then the value is 2,400 naira each. When we multiply, that will be giving us 336 thousand naira. Okay, when we multiply 236,000 naira. Now, since it is a receipt, what we just do is that we add, right? So we are not an issue. We are going to be adding. This is the most recent balance. We are adding with the new receipt, right? To give us 380 units. And then lastly, we are having this amount of money, 608 naira, and then we are adding it to this to give us 144,000 naira as the value of our closing stock. This is the value of our closing stock using the last in first out method. All right, like I said, if you notice that this is going to be different from the value we got using the FIFO method. So how do we calculate to know if what we did is correct? We also have to use the same format, right? You sum in total quantity that was received and then the value of the receipt, okay? And then we also sum in total quantity of the issue and then the value. Now, since we are having a closing stock, means after we have deducted, we add the closing stock, right? Then we'll see if it fits into this picture. So for the receipt, we are having some total of 640 units, right? For our value, this is 1,396,000 naira, right? As the value of our receipt. Now for the issues, we have quantity. Let's add in our total quantity. That is 160 plus 180, right? To be giving us 340 units. All right, we have 340 unit or quantity, and then the value that will give us 740,000 naira. All right, now let's deduct and see. Let's deduct and see quickly. So we are having 640, right, minus 340, that will be giving us 300. When we add our 80 units from the opening stock, we are left with 380 units, right? Now you can see the value 1,396,000. We are subtracting 740,000. And so when we deduct for the value of our receipts, right, now the value 1,396,000 minus 740,000 to be giving us 656,000 naira, okay? And then we remember our opening stock, okay? We'll add with our opening stock, we'll be having 944,000. So this is how we do it when we are using the last in first out method. We are looking at, we are issuing the most current goods, okay, before we issue any other. So we have come to the end of this episode on the last in first out method. Now in the next video, in our next class, we're going to be looking at the weighted average method, of inventory valuation. All right, don't forget to like this video if you haven't, subscribe to our channel if you haven't, and then share our video with as many as you can. We'll see you in our next class. Thank you.